Hi, Market Insights watchers. And Market Roundup earnings season has begun. See which upcoming company earnings could move the market using a handy Bloomberg earnings tool that I use to help forecast certain things. And in tech megatrends, he's back. Ian is back and fresh from his trip to Las Vegas, where he attended the 2024 Consumer Electronics Show. He'll share all the cool tech that he encountered there. And in Crypto Corner, Ian answers a great mailbag question on crypto's volatility and the latest happenings in the crypto market, of course, including Bitcoin's ETF approval. So let's get to it. Hello, Ian. Good to see you.
Good to be back, Amber. Nice to see you as well. I feel like we've been on a pretty extended hiatus with the holidays and me traveling to the Consumer Electronics Show last week. So it's nice to be back here in the saddle.
I agree. So good to see you. Good to be back here as well. So before we get to the CES information, which I'm on pins and needles to hear about, I just thought I'd remind everyone that in Market Roundup, earnings season has begun. On Friday, major corporations like United Health Group, JP Morgan Chase, and Bank of America reported. And after reporting, United Health stock fell because the health insurer reported higher fourth quarter medical costs than Wall Street was expecting. Where JP Morgan Chase is concerned, their shares rose as the bank closed the most profitable year in U.S. banking history. And the Bank of America's earnings, well, they declined after earnings fell short of expectations. Now, this week, as seen in this Bloomberg screenshot, 25 major companies will report, including Charles Schwab, Discover Financial Services, and J.P. Hunt Transport Services. So how do these stocks perform on average after reporting earnings? Well, this handy Bloomberg tool that I use shows the average absolute price change on share prices up or down 1 week after reporting. On average, 1 week after reporting earnings, Charles Schwab's average absolute price change is 4.13%. Charles Schwab's average earnings per surprise is a positive 1.15%. On average, 1 week after reporting earnings, Discover Financial's average absolute price change is 5.93%. And Discover's average earnings surprise is negative 2.97%. And on average, 1 week after reporting earnings, JP Hunt's average absolute price change is 4.08%. And JP Hunt's average earnings surprise is negative 1.16%. So as earnings roll in for the general market and most importantly, our stock trading services like Ian, Strategic Fortunes, True Momentum, and Extreme Fortune stock trading services will be watching and monitoring the stocks the entire time and will report back to you with any happenings. So Ian, any earnings predictions on your end for this season?
I think earnings in most cases are going to hold up this quarter, Amber. I mean, if you look at the overall economy, we haven't really seen a material softness yet. I mean, job numbers have come in, right in line with expectations. And I mean, I hate to think of it, everybody's talking about, is it going to be a soft landing or a hard landing? It's kind of like we're like in this no landing scenario where we're just might, hit this Goldilocks situation where it's like inflation is coming down, but the economy is still growing strongly. And, even if the economy softens a little bit, the Fed still has like 5% of buying power, which means like they can reduce Fed funds by 5%. And I also, on top of that, I think a lot of people just feel underinvested, right? People got shaken out of the market in 2022. We saw in the fall that cash levels were the highest they'd been since the beginning of COVID, when everyone, panic sold. And that, to me, that means that, there could be considerable upside ahead again this year for the market, especially given the strength that we saw through most of last year. And a lot of like the worries that we had and concerns about inflation and interest rates, spiking to 10%, have not come to fruition. So, I think that kind of sets up for a pretty good scenario for the market this year. And, earnings have been kind of, I think a lot of companies guided down after 2022, and we see last year, they beat modestly because the economy tended to outperform what everyone had expected it to do.
And
But of course, Amber, you also have to keep in mind, like, we invest in like secular growth stocks, right?
Yes,
Like
we do.
1 quarter of earnings in a lot of these companies, you might see some softness, like in the EVs, for instance. You saw some weakness in the fall, and it led to a lot of EV related companies, the ones that make chips and sensors and testing equipment for that sector, were weak. But the idea is that 10 years from now, everyone is going to be driving an EV, which means that the companies that we're looking at now have this secular growth stage where they're going to be much more valuable. So 1 or 2 bad quarters, shouldn't be the end of it, as opposed to like in cyclical stocks, like, when you start to see the cyclical companies like oils and different commodities start to have bad news, it usually means that cycle is over. Whereas when you invest in secular growth, we're talking about 5, 10-year, 20-year cycles, that will have some down quarters and some down half years, but we're looking at companies where the total addressable market is going to be significantly higher in 10 years than it is now, right? If you look at oil, the total addressable market is not going to be much higher than it is now in the future than it is now. It's going to be lower if you consider how many renewables, the growth of renewables. So that's why in all our services, we focus on where is the growth coming from, and what is going to change a lot faster than people are expecting right now. And in my mind, that's always where the big money is made.
Oh yeah, of course, I agree with you
And
there.
that segues us into a perfect talk about the Bitcoin ETF, right? I'm sure you have heard, everyone has heard that Bitcoin ETF was approved, not just one, 11, right, Amber?
Amazing, amazing. We talked about it earlier. Late last year as a prediction. We sure did.
I mean, it looked like it was going to be inevitable, right? So you have to think that it's probably priced in. I mean, I think that the rally we saw in Bitcoin throughout the fall, it took it from 20,000 up to 47,000 the other day, was basically the move that these ETFs were coming.
Mhm.
And Amber, do you remember the first time you ever heard about Bitcoin?
Yes, but it was many years ago. And it's
Many
like,
years.
yeah, yeah. It was toward
I-
like when it was first came on the scene, it was making some big changes, some ups, and then of course some crashes along the way. So,
Right. I mean, anyone who followed the financial markets
mhm,
10, 12 years ago had heard of it as this
right.
alternative currency that a lot of, internet wackos like to buy and hold, right? And now it's like a fringe idea that's gone mainstream. It's
Yeah,
crazy. The
it's true.
first time I heard about it, you remember Occupy Wall Street, those
Oh,
the protesters who were protesting the banks back in 2011?
right.
And they had camped out in this little park called Zuccotti Park in downtown Manhattan, right up the street from Wall Street.
Mhm.
I remember walking through that park and seeing a sign that said, "Please send us Bitcoin," and it had like an address. And it was the first time I heard about it. It was like 2011, so I did a little investigation, and I was like, the government's going to shut this down, was my
Mhm.
initial impulse on that. And then a couple years later, I met with Barry Silbert, the founder of Grayscale. And, he really piqued my interest into like this new asset class. But it really wasn't until Ethereum came along where, you had something that was a cryptocurrency that could be programmed, and you could create all this new digital infrastructure and kind of reinvent the web and give people their data back to control
Mhm.
themselves and to own themselves and to sell into the market, right? Not having these tech companies control your data, you control your data.
Right.
That was a big moment for me. But just rewind, 2017 was the first time an ETF was almost approved. The Winklevoss twins were trying to get this ETF approved. They had been working for years to try to have the asset class go more mainstream and allow anyone to buy it who wanted to buy it, and make it a lot easier than opening up an account on Coinbase or some other exchange, and would allow institutions to buy it.
Mhm.
And the ETF got rejected in
Mm.
2017. Okay. And what happened was the price was at like 1,200 on the eve of the ETF in 2017. It got rejected. The price dropped to 800, and then it started rallying
Right.
because people started to take notice that here's a new asset class. It's a new thing. And at the same time, also, that was when the rise of Ethereum started. So the
Mhm.
first Bitcoin ETF that was rejected in 2017, the price went from $1,000 to $20,000 that year. It went up 20x.
Mhm.
Okay. Fast forward now, 7 years later, and we have the ETF. It's been approved. Now, everyone is looking at the price of Bitcoin saying, okay, why isn't it 100,000? Why isn't it 150,000? Why isn't it 250,000?
Mm-hmm.
Well, I have to explain how institutions work. Okay. If you are running a large pension fund, and let's say you are running the teachers fund of North Carolina, and you've got $25 billion to invest, and now the Bitcoin ETF is out, you're not calling your trader and saying, hey, go buy me $100 million worth of it. Okay. That's not how these funds work. They
Mm-hmm.
have committees and boards and investors to deal with. And so there's going to need to be a lot of meetings and consensus in each of these institutions before they actually start buying Bitcoin, the ETF. What you're seeing in the market is mostly retail investors who are now trying to add it into some type of retirement account where they couldn't do before. Well, I mean, they had access in some cases to the Grayscale Bitcoin Trust.
Mm-hmm.
But when the institutions come, it's a much slower moving force.
Mm-hmm.
But it is one of these forces that is going to keep a bid under the sector for a long time. And I just really quickly want to just lay the case out for like why I think it's going to be essential to everyone's portfolio
Mm-hmm.
is um any fund manager wants a, an efficient in modern portfolio theory. There's an idea where it's you can own a bunch of different asset classes and you know it'll protect you in any type of environment, right?
Mm-hmm.
So you want to own stocks and they're great when there's high inflation, high growth. Bonds are good for, you know, low growth, low inflation. Commodities are good when you have high inflation. Gold is good, you know, when the world looks like it's coming to an end.
Mm-hmm.
Now you have Bitcoin. And, you know, a lot of these funds are like 40% bonds, you know, 50% stocks, 5% commodities, 3% gold, 2% cash, something like that.
Mm-hmm.
Now you have this asset class that is going to fit into that ratio for everyone because a couple of funds are going to start, and they've already started doing, you know, physical Bitcoin through Coinbase if they can, and it's going to be they'll teach it in schools. You know, they'll say this is a non-correlated asset class. It is a digital version of gold, and what it represents is a way for people to own something of digital value away from any government.
Mm-hmm.
And I think the catalyst in for Bitcoin over the next decade is going to be the high debt levels in every single country, not just the United States. You look at China, you look at Europe. And what high debt levels mean is the debt has to be paid back one way. And the way that most governments pay down their debt is to print more money. And when more money gets printed, it makes assets go up, the price of assets. Real estate goes up because there's more money chasing it. Stocks go up. Gold goes up. And now it is also going to be a catalyst for Bitcoin. And the bigger uh, scenario here is this allegiance to something that can you can port across different countries, right? So if you are a United States citizen and you don't like the government here, you want to move somewhere else, it's going to be hard to get your dollars out of the country. Or if, let's say you're in China, you want to get out of there, you move into another country, it's going to be hard to get your yuan out of there.
Mm-hmm.
But now you have a digital currency that has value that you can move to another place as quickly as sending an email. And it is going to be, has been transformative, I believe, and will continue to be transformative. So it's been a big week for the cryptocurrency sector. And we'll leave it with that, is that we've seen a rally in Ethereum over the last couple of days.
Mm-hmm.
And the reason why is because they're probably going to have an ETF 5, 6 months from now as well, right? So people who had gotten in the trade where they bought Bitcoin ahead of the ETF and it rallied now look to see what possible cryptocurrency could become another ETF. It's probably going to be Ethereum, and then after that, it's probably going to be Solana. So, you know, that is my rundown of what's happened in the Bitcoin market. It's just been a huge week for the space. You know, and I've been saying like it's coming. It's like it's finally here. It's here now. I mean,
Mm-hmm.
it came with like a little splash, right? This wasn't like the Bitcoin ETF wasn't like a big tsunami. It's kind of been like a slow moving. You know, the price has been going up, you know, pretty gradually. I mean, gradually for cryptocurrency, but it's doubled in the last couple months. So, you know, it's not like we're not rocketing to 150,000, 200,000, but I do think that when you start hearing about like sovereign wealth funds and pension funds and foreign governments owning Bitcoin as their reserve, in their reserves, like
Mhm.
it's like you just can't predict where the price is going to go. So I would recommend everyone having an allocation to it. Don't go overboard, because it's very volatile. But just where is this going to be in 5 years, 10 years? Don't think about where it's going to be in the next couple months because it's going to be volatile.
And speaking of volatility, Ian, I would like to ask this question on behalf of Mike and Sheila, one of our lifetime members and faithful watchers. And they wrote, Ian, please offer some insight on why the wild swing in crypto to start the year on January 2nd and January 3rd. For example, our account dropped over 15% in 4 hours.
Ooh.
All the cryptos. I don't mind the big drops if we also get big ups as well.
Yeah, so I mean, there can potentially be flash crashes, and I do think that you really have to, if you want to stay in the game, you got to be able to manage your position size. If you go like 50% in crypto, you're gonna have a couple months that are gonna shake you out, right? And you don't need to do that. If you put 10% in and the space goes up 10x, so you doubled your account. Um, the sell-off early this year was like people made big gains in 2023. They didn't want to pay taxes on them in 2023. So when the new year starts, and this happened just, not just in crypto, but in all in tech. If you look at the drop in Facebook and Apple and Amazon, the Magnificent Seven all dropped because people wanted to take gains on it, but they didn't want to pay capital gains taxes for 2023, which, the tax season, you have to pay your taxes in April.
Mhm.
If you wait till early January, then you don't have to pay taxes until 2025 on that. Okay,
Mhm.
so it is pretty common to see after you have a big up year, you have like a down move to begin January because of people taking profits that didn't want to take profits into the end of last year because of tax reasons. So, again, like if you can't withstand a 15% drop in your account, you
Mhm.
have too much of this. Like
Mhm.
you gotta, if you can't withstand the volatility, then cut your position size. It's just like, Amber, if you go to the gym,
Mhm.
right?
Oh,
Like
yeah.
if you haven't gone to the gym in a while
Mhm.
and you want to like do the bench press or whatever, you don't put on like 200 pounds. I mean,
Mhm.
Andrew does,
Yeah.
but
More.
you gotta start small, lift something
Mhm.
that you're comfortable lifting so you don't
Mhm.
like pull a muscle or anything like that. So,
That's right. That's
um,
right.
so just, thank you for the question, Mike and Sheila, and just be careful with, of course, your allocation to the crypto space because it is very volatile.
Yes, I agree. So, turning to tech megatrends, Ian, please share with us your insights from the Consumer Electronics Show.
Awesome. Thanks, Amber. So, I mean, if anyone reads about the Consumer Electronics Show, they're going to see some of the big highlights, right? We
Mhm.
had a LG announced a uh, window that is actually a TV. So it's a clear TV, which was kind of cool. There was Honda has a futuristic minivan for all you soccer moms out there. I think my wife is going to want one in the future. And then there was also some companies that were also doing these eVTOLs, right? The electronic. Hyundai had a electronic vertical takeoff and landing one. But what I was looking for is like, where are the big changes coming from? Like, where are the big developments that are going to move the needle, especially for when it comes to AI and some of the investments that we have? And I identified three huge trends, Amber, that I think are really going to take off, if not this year, then the next year. Now, remember a year ago, you and I were on one of these market insights webinars, and we were talking about ChatGPT. It had first been announced, and that was like the biggest thing ever, right?
Oh,
Okay.
yeah. Mhm.
So, but ChatGPT is like limited to what it can do, right? I mean, you have to be on your desktop computer and you have to ask it a question and it's not like everywhere with you. You're not like carrying your laptop around. I mean, there's a company called Rabbit that came out with this device that is not a large language model like ChatGPT. It's a large action model. So what it does is it actually can access your apps on your phone and coordinate something as if it was like a virtual assistant, right? And that can be like, hey, get me an Uber to the airport, or hey, plan me a trip, or hey, order me a pizza. And it also has a camera that can recognize things in your environment and help you make decisions on them. So you can point, what they showed is you point the camera at your fridge. Like we have a lot of hodgepodge like groceries in the fridge. I don't know about you. right?
Yeah.
Like we don't really like plan a recipe before we
Mhm.
buy food. It's like we go to the grocery store, we buy a bunch of food, and then we try to figure it out. So, let's think maybe you like are feeling very creative on what you want to cook. You can point this at your fridge and it'll look at your groceries in the fridge and say, okay, here's a recipe. And you can say like, I want something that's like healthy, that has vegetables in it. And it'll say like, okay, you've got this, this, and this. This is what you can make. Here's a recipe. There you go. So I thought that was pretty mind blowing.
That's
And I think
awesome.
so that was number one. And also when it comes to that, like this technology is new, and I think a lot of the use cases are going to continue to evolve, similar to how the iPhone had limited
Mm,
use cases when it started and then evolved. Okay. Number two development from the CES conference was the rise of robotics.
mm.
And, it's not just Roombas. There are a dozen companies making things like Roombas. We're talking about self-driving lawnmowers, autonomous pool cleaners. There are even robot dogs. I mean, I'm not replacing my dogs anytime soon, but, maybe these dogs can be useful in some instances. And I think that the dogs, not the dogs, sorry, the robots are headed towards like a chat GPT moment in the next year or
Mm,
so, where it's like all of a sudden they're a lot smarter than they were, right? And they and
mhm.
and they, you don't even have to like ask them to do things; they're just doing things for you. Kind of like you think about like the Jetsons, like Rosie the robot, right? She used to just like take care of the house and like do things like unprompted, right? She had kind of a mind of her own. Like my Roomba has like a mind of its own, but it's like not the mind that I would give it, right? It kind of like turns on randomly and beeps in the middle of the night sometimes, or then it's clogged and then I have to go
Oh,
fix it,
yeah.
right? Like I need something a lot smarter than a Roomba. And I do think that when it comes to robotics, like we're headed towards that moment. And then lastly, and this was like the most mind-blowing thing I think I've done in a long time, was the rise in virtual reality. Okay, so um, I tested basically a gaming headset that it was so clear and the reality reacted so quickly that I believe that I was in this like other world, and it had like they do these noise canceling headphones now where it's like it doesn't really go in your ears, but it blocks out everything you are.
Okay.
And, I'm standing in this big conference room in CES with this headset on,
Mhm.
and like I had to snap myself out of it. I
Mm,
like didn't know where I was for a second. It was pretty
mm,
mind-blowing. And I think that VR is one of those things where the Apple Vision Pro is coming out in the next half year or so.
mhm,
The Apple's VR headset, it's supposedly better than what Oculus and Meta have.
mm,
They're expensive. They're $3,000, right? So it's not for everyone.
mhm,
But what we're going to see is people will start using it, early adopters. The tech is going to continue to get better. The price is going to come down on these,
mhm.
similar to like what happened with smartphones and flat screen TVs. Remember, like flat screen TVs in 2000 were like $8,000,
Oh, yeah.
and they were terrible. And
Mm,
imagine if you had an $8,000 flat screen TV from 2000 today, you would be like,
mm,
I can't watch this thing, throw it out the window.
mhm,
So, but you can go buy a flat screen TV now for $150. That is so much better than it was 20 years ago. And
right.
that's how phones developed. And I believe that is how virtual reality will develop as well. Seeing what's coming, using like the new version of VR headsets, it is absolutely mind blowing. I'm not a gamer, but I can see like a lot of use cases for gaming. And then you can also see use cases for um, people who need to do something or control a robot in like a faraway place, right? So, you could have a surgery happening in California, the doctor's in New York, the surgeon is a robot, but it's really the doctor controlling the robot. I'm sure that doctor is probably not too far from being replaced by some of the
Mm,
robots, but what I'm saying is like that the virtual reality is so realistic being in
mm,
somewhere else, um, that I think that the use cases and the use of this is actually going to explode over the next couple of years, um,
right.
just because of how mind blowing the technology is. So those are my three takeaways. Outside of like the cool, screens,
Mhm,
TVs, which I probably won't have one anytime soon. And there are a lot of other things as well, but I think the three main things are large action models. This idea that AI can now access your ecosystem of apps and become like a planner for you. Something that
mhm,
like Siri and Hey Google and Alexa can't do.
mm,
Number two is the rise of robotics, and robots getting more and more intelligent and also having machine vision, which is key. And number three is the advance of the metaverse. So I think those are my three big takeaways from CES this year.
Awesome. That's just fascinating, Ian. I'm glad you broke it down that way. And I'm looking forward to how this pans out for 2024 and beyond. I'm glad you're back home safely too. So that's awesome.
Oh, thank you. Yeah, it's good to be back in Florida. It was 30 degrees in Las Vegas. I thought it didn't get cold out there. It was yeah, it was cold. I'm not used to the cold.
No, we're not used to that. I agree. Well, I'm glad that you mentioned that, and we covered quite a bit today. So everyone, thank you for hanging out with us and listening in. We hope you learned a few things and can share with your friends and family. And if you have a question like Mike and Sheila, please email us at marketinsights@bannionhill.com.
Thanks, everyone. Have a great week, and we'll talk to you next week. Take care.
Take care.